Hello, everyone. This is Brian Holly. Welcome to our Happy Tuesday, April 14th to everyone. We really appreciate you joining us tonight and taking time out of your busy schedule. I got to tell you that I wish we were all together somewhere interacting face to face so I could see all of your smiling faces. But we're also glad that we have the technology to keep in touch with each of you, our partners, during these challenging times. Darwin and I will be your hosts tonight, and we're really excited about the information we have to share with you, our family of partners. Just a couple of housekeeping issues before we get started. I want to be sensitive of everyone's time. We will have time for questions at the end of the webinar, but there is a chat box, and if you would like to pose a question in the chat box, please do, and I'll get to those questions and we'll answer them as we can. If your question does not get answered tonight, then I promise I will follow up with you personally. I'd also encourage you that if there's any additional information you would like that you don't hear in tonight's webinar, please feel free to reach out to me via email or phone, and I'll be glad to share any information that you'd like. So having said that, again, thank you all for joining us tonight. I'm going to turn it over to Darwin here for a minute, just for a quick welcome, and we'll get started.
Hello, everybody. Thank you for coming on this Tuesday night. I want to thank you for coming in and taking your time to listen to what we have to say. First off, I hope everyone is staying safe, healthy, and in good spirits. I know we're all locked in the house and going a little stir crazy, but hopefully we can get a little bit of distraction here for a few moments. We are living in absolutely unprecedented times. People are sick and dying all over the world due to a virus. It is absolutely surreal. What's funny is all of the world threats, this is actually the one that I thought was the most realistic and the most frightening. It's just an invisible enemy. And I hope we come out of this stronger and more prepared to confront any of the other challenges we might have in the future. This does put in perspective how fragile life is and how we must cherish everyone around us, especially the ones we're locked in houses with. And hopefully if you have family that is not with you, then you're staying in contact and everybody is staying safe. Now, if you're infected if you are affected, not infected, if you are affected in any way, and we can be of assistance, please let us know. We're all here for each other. It's one big family, and we're here trying to watch out for you on this side of the fence. But if you need anything, definitely let us know, and we'll do whatever we can to help. First off, we've been focusing on protecting our teams and our residents as much as we can. Brian will go over that in a lot of detail. But just like any other property emergency, the first priority we always take is to make sure everyone's safe. This is key one, is make sure the people are safe. That means our team and our residents. After that, the next priority is the protection of the property and your investments. Now, I think we have all of that well in hand, and we'll go over that more in detail in a moment. But be assured, everybody is working 24 hours a day, keeping up with absolutely everything and adjusting where needed. And with so many businesses closed, so many people lost their jobs, restrictions put on our industry, and there are definitely challenges that we need to overcome. And every day there's something else that changes the narrative on our decision making, and we constantly adjust and overcome. We are concerned about people paying their rent. Our first analysis, when we first started analyzing this, showed that on average we can absorb 25 to 30% decrease in collections and be okay. Just as a heads up, April so far seems to be in the 15 to 20% reduction in income range, which is encouraging. It's better than we anticipated. And of course, we anticipate the possibility of worse numbers in May, but in any case, we're going to be fine. So your investment is fine, the properties are fine, the people are fine. So everything's going well. We're very upbeat in handling these challenges that we have. We are capitalized to protect from dips in the market. We go in there, you know how conservative I am on everything. Now, dips will happen just like in any other investment, Just look at the stock market. It went down 30%, back up 20%, but it's still down over 7,000 points. The values of the property do go up and down, and we ride through all of these waves. And while the values may have dipped on a temporary basis, this actually is, it turns it from a seller's market to a buyer's market. And all of our investments are in hard assets, which is great. So those will rebound quickly. So this is a challenge, but we're going to get through it. Now, I'm going to say it to you again. You'll hear of properties failing. You'll hear of properties having cash calls. You'll hear about investors losing money. Now, none of those on our side, but you'll have some people that want to jump ship and sell at a discount. That's just like capturing your loss. I highly recommend against doing that unless there's absolutely no way that you can make it without cash. There's no doubt that many investors and syndicators will have problems. I can't guarantee that we're immune, but I'm confident that we have great properties. We've prepared for these problems. We have an awesome team, and we can weather this storm. Knowing that we're in good hands and staying committed to the success of the properties, we can also look to the future and potential opportunities. Now, I'll address those later in the meeting. But first, I want Brian Holly to give you an update as to our specific actions, plans, and property updates. So take it away, Brian. Thank you, everybody.
Thank you, Darwin. First thing I'd like to share is just our agenda. And again, welcome everyone. We're going to go through real quickly just the management strategy. You know, Darwin talked about it a little bit, but I'm going to give you some specifics on how we're handling the management strategy during our coronavirus challenge. And again, as Darwin said, it's really meant to protect the properties, protect the staff, make sure that everyone is safe, protect our residents, and continue to maximize the performance of the properties. I'll then go into the portfolio update and give you just a real brief snapshot, one slide performance snapshot of each property. Then I'm going to turn it back over to Darwin. He's going to give you an update on what's going on with Valley Center, which is our newest acquisition, of course. We've had that just a little less than 3 weeks at this point. Darwin's also going to discuss with you some investment opportunities, some things that we're working on, yes, in this downtime, because there will be opportunities that avail themselves to those who are prepared to take advantage of them. And then last but not least, Darwin will give us just kind of his outlook on what he expects for 2020, and we'll have time for question and answers. So to be sensitive of everyone's time, let's jump right in and talk about our management strategy during the coronavirus challenges. And I would tell you that the strategy that you're going to see tonight is really meant to accomplish 4 main goals. The first of that is to educate both our residents and our staff on common sense measures to minimize risk of exposure, while by providing specific protocols. We're initiating daily cleanses, frequent sanitizing of commonly used surfaces, and provide personal protective equipment for all of our staff. As Darwin said, it's our top priorities to keep everybody safe. A little bit of slow reaction to the internet. It's because we have so many people on board, but bear with me just a little bit of patience here. I want to make sure that you can see my screen. Okay, the next main goal is to continue all of our property services to meet the needs of our staff and our residents. We're talking about our trash service, our grounds cleaning, our work orders. Think about this. You know, we looked at every single expense for the property and said, okay, where can we cut expenses to preserve our cash position? But if you think about it, trash service is not one of them. Everybody's at home now. So there is even more trash being manufactured, made on the property. So that's just gives you an idea of what we're doing. Third main goal is to focus our efforts on renewals to close that back door. And this is really to compensate for the reduced leasing traffic. And we're also handling all leasing traffic with virtual tours and online application processes. We're also providing incentives for residents to continue paying. I will tell you, it's, you know, I've shared this with Darwin, it's amazing at some properties. I mean, we got 4 leases at a property today. So there is still traffic. We have fine-tuned that process from our ads to the way they can contact us, and our leasing agents have fine-tuned that process to lead them through the entire application process and handle everything they would need from paying their risk fees and everything up front in order to get them in their apartment. So we're continuing business as normal. Fourth main goal is to reduce overall expenses, again, to preserve our cash and maximize our income. We're doing that by stopping or reducing our vendor services. For example, landscaping has been cut back in half. We're no longer accepting package deliveries from vendors for our residences. We have had some reduction in staff hours. It has not been a lot, but it has been when you're having less traffic on site, obviously you need less staff on site. Because we're handling only emergency work orders, we don't need as many maintenance people on hand at the time. And it allows us to have a little bit of control and reduce on our payroll costs. And as I said, we're offering early pay incentives to our residents. Some properties demographics are really taking advantage of it, and some are not. I want to real quickly go through you just the actions that we've taken, and our protocols that we've put in place at our properties are really 3 different levels. Level 1 protocol was enacted on March 9th, 2020. And what that does is complete sanitation and cleanse of office and common areas, frequent cleaning of commonly used surfaces, doorknobs, light switches, fitness areas, you name it, while notification to all residents of level 1 protocol with CDC recommendations. And again, this is really important because the more we can educate our tenants and our staff, we feel like this will help us, weather the storm, so to speak. It is critical that we give a sense of confidence on our properties and make sure that our residents understand. In fact, some of the ads that we're running really feature the fact that we're cleaning and sanitizing our properties, and would love to have them as residents. So that's our level 1 protocol. And these things happen really quickly, to be honest with you. Our level 1 protocol, as I said, was on March 9th, 2020. And then we're going to go into our level 2 protocol. And again, I apologize. We have so many people online interested in the information that our connection's a tad slow, but want to make sure that everybody can see my screen. Level 2 protocol was enacted on March 13th, 2020, and in addition to everything that was in level 1, it just added a notification to our residents to handle business via phone or email with continued distribution of educational material and recommendations, and also enhanced cleaning and sanitizing of common areas and frequently used services. So again, it's about providing confidence to our residents. It's also about controlling the traffic in our offices. Level 3, which is kind of our last level protocol, was enacted on March 20th, 2020, and included the following. Office and maintenance staff was reduced to handle absolute necessities such as make-readies, grounds cleaning, leasing, etc. Office and clubhouse closed to all traffic except to load laundry carts. So we don't have residents coming into the office and cannot use the clubhouses. All business is handled in some cases through the window, and in most cases phone and or email. As I said before, we stopped accepting delivery packages for residents. The staff has been ordered to address emergency life safety maintenance issues only while wearing personal protective equipment. So if a resident calls and it's not an emergency work order, they need a light bulb changed, I'm sorry, we're going to put you on our list, but it's better that we don't come into your apartment right now for your sake and or ours. All work orders, leasing activities, etc., is scheduled by phone, online, or email. And as I referred to before, we really fine-tuned that process so that we can continue the leasing activities. Vendor services reduced or stopped, landscaping, etc., in an effort to reduce our property expenses. Reduce staff hours to compensate for reduced traffic and work orders, and then make-ready units completed as much as possible by in-house staff. Since our maintenance guys who are capable of handling a lot of the make-readies, since their work order load has gone down, now we can use that without having to go to outside contractors to do much of the work that we have on the property. Next, I'm going to talk a little bit about the government assistance programs. I've received a lot of calls from many of you asking if we're taking advantage of this, and if so, how we're taking advantage of it. So again, just want to share the information with you. There's really one government program that we felt that we really need to take advantage of, and that's called the PPP, and that is the Paycheck Protection Program. This Paycheck Protection Program is a loan designed to provide direct incentive for small businesses to keep their workers on the payroll. This loan will be forgivable if all employees are kept on the payroll for 8 weeks and the money is used for payroll, rent, mortgage interest, or utilities. Dork Hope has submitted an application for the PP loan and is currently in the underwriting process. We expect approval by the end of this week and are real happy with the services we've been getting from our lender on that. So we are taking advantage of the PPP, the Paycheck Protection Program. I have had some people call me too.
Brian,
Yes.
quick question. And how does that benefit the individual properties?
Well, understand that Dork Hope as a whole has applied for the loan as a company, but what we're able to do is, again, we will be able to use those funds for payroll. We use those funds for rent, mortgage interest, and or utilities, so that the existing cash we have on hand can be redirected to other necessary things. And again, it also allows us to keep our excellent staff. Even though hours have been reduced, and again, this is a lot of the questions that have come from some of you that have called me. What we have to do to make that loan forgivable is that after we receive the loan, whatever that date is, 8 weeks later, we need to be back at the level that we were on average prior to receiving that loan. So we really feel good about the fact that we'll have that money, obviously put us in a much better cash position as well.
Let me go ahead and interject something here, if I may, Brian. Is what that means is we've got two to 2.5 months worth of payroll for each property. So that will be divided up basically with what the payroll numbers have been for the last for Q1 of 2020. So that means for 2 months, at least 2 months, we will have 100% of the payroll covered for those properties. Now, individual properties cannot do it. They don't have any employees. And if there's owners of those properties, they can't do that because it's a passive investment. So we had to go through all of the properties through Dork Hope as the employer. And by doing that, that saves us those 2 months at least worth of payroll for all of those properties. So just to give you an idea, it all passes through to the individual properties. This isn't a benefit to Dork Hope. This is a benefit to all of the individual assets. I just wanted to make sure that was clear.
Absolutely. Good point. Thank you, Darwin. A lot of the questions I've been getting too are asking about how do we feel about the forbearance? And I'm going to tell you how we feel about it, and Darwin can jump in here too. But I can tell you that as Dork Hope and DGRE portfolio, we really do not intend to entertain forbearance on the property loans. This is really a gimmick for agency debt providers to appear to be helping. But there's really two main reasons that this is not really a helpful program. Number one, if you do take 1, 2, 3, whatever months out and choose to make partial payments or not any payments on your loans, then the lender is going to take those months and they're going to amortize them over the next 12 months. Now, that's going to increase our payment each month 16%. This could very easily leave our tax and escrow accounts short at the end of the year. And the worst part about the forbearance is that until that amount is paid back, which could be up to 12 months later, we cannot evict anyone for non-payment. So we get into a really bad spiral there where if your income drops, so you kind of may need to take forbearance, then your payment goes up, but you still can't evict anyone, which is keeping your income low. And this will happen to some properties. You're going to hear about some of those out there, properties that were underfunded and cannot do cash call and or raise additional money, or just were not positioned properly going into the downturn. Anything you want to add on that, Darwin?
Yes. Just to re-emphasize everything that he just said, if a property goes into forbearance, I think that property in 3 to 6 months will be in extremely bad shape, and it's just not the right way to go. I think it's going to be in bad shape, and I think that's going to be the kiss of death is taking forbearance on the agency debt. You can do forbearance on other, this is mainly for agency debt, Fannie Mae and Freddie Mac. We've got a few of them that are not agency debt that we still can do evictions, and banks could do some forbearance. Now, the only time to really do forbearance, and I will say that my brother did it on properties that he has. A lot of you met him. He's got about 80 units in Lake Tahoe, and he's an IRO. He's an individual owner. And because of that, he went ahead and took the forbearance, which was an easy thing with his banks. They said, okay, no problem. But he personally has the cash to be able to make up that difference. He's just doing it for cash flow purposes. So in 90% of the cases, people are doing it because they need the cash. There will be some that are an exception to that rule. That's it.
Okay, thank you, Darwin. Good points. Like we said, we really wanted to take advantage of the Paycheck Protection Program, and we really wanted to stay away from the lending forbearance. Again, simply because of what the PPP was a big help for us with having 2.5 months of money to cover our payroll at the properties. And of course, we talked about the issues with the lending forbearance. We've had significant number of people continue to get on with us, which is great. We're glad you're here with us tonight. So again, pardon the some of the slides are moving a little bit slow, but we'll get to this. One of the things I realized today as I'm moving through the slides here is that today is actually supposed to be the day before tax day, but we all have a 3-month extension on that. So I hope everyone's taking advantage of that if it's in your best interest. One of the things I look forward to doing tonight as well was I was hoping to share some did you know thoughts with you as we do at the meeting, but I just really wanted to be able to cover all of the information tonight with you. So again, apologize for the delay here. Okay, we're going to go into the DGRE portfolio updates real quickly. And again, this is just going to be kind of a snapshot, if you will. This is Amber Vista, no particular order here, but this is Amber Vista. And what you'll see is I'm providing, and each slide will be the same. It'll be just key performance indicators from January 1st of 2020 to the end of March 2020. And I'm picking that time because that's really the takeover date for Dork Hope, and it'll give you a good idea of what's going on with the property. Here you see the occupancy numbers, which start at 94 and are now moving into April at 98.8%. You can see the income. I do want to point out in January, you see an asterisk there, and I want to point out that January was a bit unusually high due to a successful effort by Dork Hope, actually upon takeover on January 1st, to collect delinquent rent from previous months. We were actually able to go in and collect over $11,500 from November and December of 2019. So that's why there looks like a big input in January. You can see the expenses anywhere from low to high 50s there, and you can see the net operating income as well. Just a couple of bullet points. The April rent collected that you see in the April column, that is the rent, that is actually the total collections as of yesterday, Monday, the 13th of April. And it represents 85% of charged April income. So that's 85% of what we would expect to collect in April, which again is, we think that's good news because it's a good sign. We're not quite halfway through. It's not unusual to be 80–85% halfway through. But in some cases, as we were doing some forecasting when the coronavirus situation hit, we were hearing numbers that there could be, as little as 70, 60, even 50% income issues. But as you see, we go through here, you're going to see that it's pretty consistent from the low 80s. We have one property even at 95%, but you're going to see that's pretty consistent. Spectrum is currently installing all new infrastructure for cable TV and internet access, which is going to be a great amenity for our residents moving forward. Also want to let you know that Amber Vista completed the covered parking project in early March and will complete the parking lot and repaint of the parking lot in April, which will complete the Amber Vista CapEx project. So that CapEx project will be finished and will be full speed ahead at Amber Vista. I'm going to pull back the curtain here and we're going to go to Brookside. And I really want to highlight some things for you that we're really excited about. Dork Hope, as you can see, is focused and made really great progress on increasing the income, reducing the expenses, and therefore increasing the NOI, which we're all interested in. You can see that the occupancy continues to go up from January through April and is over 98% moving into April. Income in January 272 to March at 288, almost 289. Again, you can see the income number for April, which represents 82% of our April charges. And again, that's updated as of yesterday. You can also see we've made a real effort to decrease the expenses. So they continue to go down while income goes up, which obviously we all know and are excited about, which increases our net operating income. Do want to point out too that Brookside has undergone a 50% staff turnover since Dork Hope took over. It's really enabled us, the management, to instill a culture of performance and accountability. And I think you can see that in the results of the first quarter of 2020. Also, Brookside added security cameras and speakers to key areas of the properties. And these additions have really made a huge difference in controlling the walk-through traffic at Brookside, which has greatly reduced the vandalism and crime that we had there, which obviously is making our tenants much more happy. So good news, Brookside. Okay, let's move on then to Gold Creek, which is our newest multifamily acquisition. Dork Hope just took over Gold Creek, as you all know. That takeover date was official on February 21st, 2020. So I don't have a lot of history for you there. The February numbers that you see here is just the prorated amount of income and expenses for the 8 days that was owned by many of you in our audience tonight. March is the first full set of information. You can see a little over 94.5% occupied. You can see the income and the expenses and the net operating. Again, the April income, you can see that the occupancy is going up in April due to some leasing efforts, which again is really remarkable, thinking about what we're going through right now with coronavirus, and we're still able to increase occupancy by handling leases, really fine-tuning that system online to continue to incentivize people to move into our properties. The April rent collected, as I said, represents 95% of April charges. So at Gold Creek, we've collected 95% of our expected income already in April, so that's good news. We are exploring options to increase the visibility of the property from the highway traffic. All of you knew that from our CapEx plan, so nothing new there. We're just know that we're still looking at options. We've tried several things and not really happy with the results, so we're going to continue to work on that. Okay, dramatic curtain call here for Riverbend. Again, really, Riverbend continues to maintain high occupancy and increase income. In fact, March 2020 was the highest income month ever at Riverbend. You can see that the occupancy 95, 95.6, 96.3, and is moving into almost 97% in April. And again, you can see the income continuing to go up January, February, with again March, the highest month ever at Riverbend at almost 180 grand there. The expenses are holding steady in the high 70s, low 80s. And again, net operating income, as you can see, in the 90s, which we're thrilled with at this point. And again, as I said before, all the numbers you see in April are collections as of Monday the 13th. And at Riverbend, this represents 75% of the April charges. It is not unusual. In fact, it is absolutely normal for Riverbend to consistently have late payments. It's just a demographic that tends to pay late, but we are seeing some increased signs of the current economic challenges at Riverbend, probably more than any other property. But as you can see, performance is good and we're still moving ahead strong. Staff is going to be having special focus on collections this week in anticipation of eligible recipients receiving the stimulus checks, coupled with the increase of unemployment benefits. So we're making extra efforts to try and remind people that when they get their stimulus checks and their unemployment benefit, that their rent is still due.
On that same, real quick, as far as telling the good, the bad, and the ugly, because of that collection number, that's one of them that is one that we're watching real closely and trying to put a lot of effort in, because that demographic is harder to collect from. So that's the one of two properties that I think we're going to have a struggle with, just FYI.
Yeah, and as you say, we're going to continue to make strong efforts there.
Absolutely. We're still making 100% effort, but that's just one that's on our radar as far as potential problem.
Yep. Okay, moving into Silver Creek. And again, as you can see here, you can see the trend. Silver Creek income and NOI continues to climb since Dork Hope takeover. 288 in January to 295 in February to almost 295 in March. And again, you can see the April number, which indicate that's about 86%, again, collected as of yesterday, represents 86% of our April charges. And you can also see that we are making a strong effort on expenses. 151 in January, 143 in February. That would have gone down, but I do want to point out, you see the asterisk there. The March expense saw a huge expense increase due to one transaction, and that was a $43,000 settle up on the property taxes with the previous owner. This was because of a successful effort on our part to reduce the property tax, or I'm sorry, the property valuation. So what happened is we had a deal with the previous owner, and he prepaid the property taxes based upon what they were expected to be, with the agreement that when we fought it and if we were able to reduce it, that he would be reimbursed for his overpayment of property taxes. And the good news is we were successful in those efforts, which is good for us moving forward, but it did mean that we owed the previous owner $43,000 settle up because he overpaid taxes, $43,000 at closing. So that's why you see your March expenses a little bit high. So if you take the 43 out of there, then you can see the expenses continuing to be reduced. Staff, again, is going to focus on collections this week in anticipation of eligible recipients receiving the stimulus, coupled with the increase in unemployment benefits. Okay, let's go on to 1019. And this is probably one that I'm most proud of, and I know you guys are thrilled with the news as well. You can see the occupancy. Dork Hope was really able to get involved in that property mid-December of 2019. And at that time in December of 2019, the property was at 69% occupancy. You can see the trend and where it's going now, from 75.8 in January to almost 83 in February to almost 84 in March, and now a little over 85 in April. Again, really terrific effort by the entire team and certainly the staff that's there. The income, again, you can see is holding steady in the mid-1 teens. You see the 98,000 that we've collected to so far in April, which represents 87% of the April charges. And then again, you can see the net operating income, and I'm just going to point out a couple of things to you as you kind of compare these numbers. But the average monthly income in 2019 was 98,000, and it's around 116.5 now. The average monthly expenses in 2019 were about 70,000. Again, you can see those have been reduced to the low 60s. And your average monthly NOI is basically doubled from 28,000 an average in monthly NOA in 2019 to where you see it in the mid-50s now. 1019 continues to rehab units per the original CapEx plan. The difference is, though, we're only rehabbing those units as needed, because leasing, you can see the occupancy is increasing, so leasing is really blowing and going there over the last 60 days. So we're continuing to rehab those units at a significantly reduced cost, though, because we changed the scope of work, and we found out that changing the scope of work and not doing quite the extensive rehab is still meeting the needs of our residents down there in the hill country of Texas. And we're also able to use our in-house labor to do all of this. So those are just some of the reasons that we've been real successful. And again, a lot of kudos to Vicki Skidmore and her direction and the staff down at 1019. I'm sure all of you are pleased with those results, and we're going to continue to try to meet and exceed your expectations there. Okay, let's move on to Villa Creek. Again, this is just, it's a blow and go property. As you know, it's been a great performer. It continues to, you can see the occupancy well over 98%, income mid to high 150s. Again, in April, they've already collected roughly 87% of the expected income for April. So that's, again, good news. Expenses, high 80s, low 90s. You see the net operating income as well. I am excited to give you some good news about the rebuild. As you all know, we had a tornado event back in 2019, mid 2019, and the rebuild is now well underway. In fact, all of the work, it was an 8-month struggle with the insurance companies and even included some adjuster help, but that has been put behind us now and is all settled. And all of the work on the 7 buildings that did not require a permit, that's been completed for a while. So those were already done. The permit for the rebuild was actually issued just a little less than a month ago on March 18th. And we are focusing our efforts on rebuilding the rebuild of building number 12 because it has 8 units. So we want to get those back up and operating as soon as possible. And then we'll move on to number 11. In fact, the staff has already started pre-leasing the units in building number 12 for a June 1 move-in. We do anticipate they could probably move in a little bit earlier, but we want to be a little conservative and safe there. But good news that we'll have building number 12, which is 8 units, back on board here really soon. Then we'll be quickly followed by the rebuilding of building 11, which has 6 units, estimated to be completed, around late June, early July, and we'll start pre-leasing in mid-May. Okay, let's talk about Southwest a little bit. Again, here's your income numbers. I do want to point out that you do see a little dip in the income. I do want to point out a couple of factors, though, and that is, number one, there were a lot of these tenants that were on week-to-week payments at this property. So what that means is they're used to paying weekly. So it's not unusual, whereas the other properties would tend to collect the vast majority of their income in the first 5, 6, 7 business days of the month. That is not the case at Southwest. You may get a third of it the first week, and then a third of it the next week, and a third of it toward the end of the month. So this is not a huge concern at this point because it's kind of right on track with the previous collections. Expenses, again, you can see here mid to high 30s. You see where your net operating income is. And the rent that you see collected in April, again, was collected as of Saturday, April 11th. The other thing to remember here at Southwest as well is that this is a kind of a major CapEx program. And when we took over, it's not unusual to see your income take a slight dip and your expenses to take a slight increase, because you are actually trying to vacate some of those units so that you can rehab the interiors and then turn around and fill them back up a nicer unit with increased rent and new tenants. Some good news. Southwest was successfully removed from the flood zone. This will result in a savings of over $17,000 a year in flood insurance costs. So excellent work there by the staff. Anand really worked hard on that, and the on-site staff along with Brian to make that happen. So great job there. All required exterior rehab work, including apartment signage and exterior lights, have been completed. The interior rehabs are on hold at this point. As of today, 30% of the units are done with full interior rehab and new appliances. Moving on to what was Greenhouse, 2405 Park Row is the new name. And again, you can see the occupancy. Income continues to climb. Expenses are holding steady in the low teens, and your net operating income continues to climb. Again, the $26,000 you see collected in April represents about 83% of current April charges. And Southwest, as you know, is under a different third-party management, and they have also applied for the Paycheck Protection Program. So I want to make sure everybody's on the same page with that. Okay, moving right into Halinani, one of the exotic properties in Hawaii. Again, you see the occupancy. Somebody asked me the other day why it goes from 93 to 100. Well, that's only one unit. So because there's a small number of units there, There's anytime one is vacant, it's a pretty big jump. But again, you can see rising income, you can see expenses holding steady, and you can see increasing net operating income. The $18,000 that has been collected so far as of Saturday, April 11th, represents just under 90% of the charged April income. We're currently in the process of requesting bids for a full exterior paint job. It's kind of a coral color, but that, it's been several years now, and it's fading a little bit, so we'll be painting that property.
Another thing on that, Brian,
Yes.
is we're actually analyzing putting Halinani and Kainani together and looking at selling those. We were right before this whole thing hit, because the amount of equity gain would be tremendous. So that's still on the radar, but obviously pushed out probably at least 6 months.
Okay. Yeah, we'll keep you updated. Speaking of Kainani, again, 93 to 100% occupancy. Income continues to rise steadily. Expenses holding steady in the 4,000 to 5,000 range. Net operating income, high teens to low 20s. Again, the 24,000 you see collected represents right at 88% of the charged April income. And again, the reason I keep talking about that is that it gives me confidence, and it gives all of us confidence that some of the worst fears that some of us may have had going into April about dip in collections, at least for April, have not been realized. We're seeing consistently, as you see across the board, low 80s to mid 80s, and even 95 at Gold Creek, as I said. Kainani completed the planned CapEx project in early 20. Really a great looking property, and I know I sent those of you who are investors in that property, I sent you lots of pictures after the window project. It is just a beautiful property, that blue property sitting next to the coral property up on the hill in Maui. At this point, I'm going to turn it back over to Darwin to give us a Valley Center update and proceed with the program. And again, if you have any questions about the properties, I'm not pushing it off, but please feel free to type them in your chat box and I'll answer them as I can. And please feel free to give me a call with any questions about them as well. So Darwin, I'll throw it back to you.
Okay, Valley Center. As you were told, we just closed on that 3 weeks ago, and right in the midst of everybody being locked down. And when that happened, everybody knows that we've already negotiated. We had already negotiated a $350,000 price reduction to go into CapEx, and we were hitting that 11th hour to close. And so I negotiated a 6-month rental income guarantee with the sellers. Go ahead and go to the next slide, Brian. So they're guaranteeing the rents for 6 months. We're going to move our office in there. There's very limited competition in the area, which is great. There's automatic rent increases in the leases. Tenants also pay any expense increases. Now, we've revised the numbers because it got down to that point and everybody was scared. They didn't want to put money in. They were worried about what's happening. Well, the property is doing great. We are renegotiating a few of the leases. But what's great is we're giving a lot of people, whoever wanted to negotiate it, we're giving them 2 months free rent and then adding that rent onto their lease to be paid back over the remaining term. So in essence, we are raising their rents and at least getting them used to paying higher rents. And because of that rental guarantee, we're still going to be reimbursed for that. So we're not out any money. We're actually making additional money. Now, going through and looking at this, because we still had, we were not fully funded when we closed. We hit our minimum threshold, but we still have room for 5 people. I readjusted the numbers so we collect less investment. And because of that, we've tightened our belts on some of the CapEx and did what we can, to readjust everything. And then I readjusted the numbers as well and actually put lower income in year 1 than what the previous owner had for the first year also. So I adjusted the income down. I tightened our belts on a lot of the CapEx stuff. And because of that, I lower the amount of capital we need to raise. And in doing that, that actually increased the per year average ROI to over 20% per year for investors. And you can look at what the returns are projected on this property: 7.7, 7.6, 9.6, 10.1 as far as cash flow each year. So an immediate cash flow. And it'll be our home. It'll be the home to Dark Hope Management Group, Darwin German Real Estate, and be right there. So we've got room for 5 spots left. So just contact David if you are interested in that. Next one. Here's a picture of the property from above. You can see it right in there. It's a beautiful building right in the middle of Las Colinas. A little fun fact is Troy Aikman's office was in there for many years while Valley Ranch was the headquarters of the Cowboys. And there's a sculpture right in the middle of the lobby that is supposed to be Drew Pearson. And so I've actually contacted Drew Pearson Foundation to see if they want to have that. So that'll be something fun. Next one. Now, here is where we get a little bit opportunistic. Now, obviously, we don't want to take advantage of people. We know there are people out there hurting, things like that. But what's happening right now is the dip in income really is going to hurt a lot of syndicators, especially syndicators that either have bridge loans that are coming due, or that are underfunded, that they can't take they can't absorb a hit, which is also why we lose out on a lot of deals, because they go in underfunded. But now it's really going to show what's happening. And so I have teamed up with somebody, and we are starting Infinite Capital to take advantage of some of these dips. Go to the next slide. I liked this quote from 1932, right at the end of the Depression, the Great Depression. Some people say they want to wait for a clearer view of the future, but when the future is again clear, the present bargains will have vanished. In fact, does anyone think that today's prices will prevail once full confidence has been restored? Think back a little bit to the crash in 2008, 9. Do you ever look back and say, you know what, I should have been buying in 2010, 2011, 2012, 2013, 2014, because that's when it was down. And I actually made a huge error in not buying every single thing that I saw, because I wanted really good cash flow. And quite honestly, I was a little more afraid than I should have been at that time. And the people that went and bought during those times have made a fortune. Well, because of this dip, because of this pandemic, people have lost jobs. Again, I'm not trying to take advantage of those people, because, I mean, they're hurting, and I understand that. And if properties fail, then it's not going to be good for the residents. It's not going to be good for the city. It's not going to be good for the investors. It's not going to be good for any of them. So what we're doing is we're putting together a fund to be able to help take advantage of those opportunities, make some money for us, and also have a win-win scenario for the residents and the cities and even the current investors before a property would get foreclosed on. Go ahead and go to the next one, Brian. Now, it is a perfect storm. And again, I'm going to say this is temporary. The COVID global pandemic, shelter in place, so nobody's working, 17 million jobs lost. The oil war, Saudi and Russia oil war, now that is devastating the oil industry, but it is definitely real good for consumers and airline prices and anything that relies on gas, which is really good right now for all the truckers that are delivering everything we need. This is also the fastest bear market ever. Within a matter of a month and a half, we crashed. The stock market went down 30%. Unemployment went through the roof. In 3 weeks, 17 million jobs lost. And a global recession, because this is not just happening to us, this is happening everywhere. So economic vacancies are going to go up. Rent, we're looking at it needing to be flat or declining in some areas, up in others, which means property values drop. Cap rates are probably in the short term not going to change at all. But the big thing is thousands of bridge loans coming due in 20 and 21 that they won't be able to refinance. If you go back to 2009, 10, 11, 12, it was extremely hard to get a loan. And only the strongest of borrowers could do it, and which kept a lot of inexperienced people out of the market. Go to the next one. Okay. Still, in workforce housing, demand is always strong. Vacancy rates are low. Rent increases are still strong, and demand is still expanding. Now, right now, it is not because of the lost jobs and hurt wages. But this is going to be a very, very quick rebound because the fundamentals of everything were good to begin with. Supply, 90% of new construction is Class A. So there's not Class B and C quality properties being built. And properties older than that have general obsolescence. They're obsolete in their design and they're being torn down. And in a time when rents are going to go down, those properties are not going to get the maintenance they need. It's not going to justify CapEx. So those properties are going to get in worse condition. The very bad ones are going to become in worse condition, pushing people into the B class. And the A class are going to push people into the B class for lower rents. And still, housing costs have still risen. Now, vacancy rates are below averages. So we're looking for properties that can do that. Go to the next one. By the way, I have got a huge, huge, huge surprise coming up for you, and I think it's the next slide. This is something that you'll be very excited about, and it means absolutely nothing, but it's kind of an exciting thing. Okay. If you look at historical vacancy by class right here, this top slide, that goes all the way back to 2003, if you can read it, and you can see the drop that came down as far as the vacancy. So it dropped from 2008 to 2009, vacancy went way up. But then over the next 5 years, it dropped way down to 4%. Now look at the change of rent year over year. Obviously in 2006, it was up, 2007 it was still up, but then 2008, it crashed and you see that big dip. But then rents bounced back, rebounded very high. And part of the reason for that is because during that dip, they weren't building anymore, they weren't doing anything, so it had to stabilize. What I find interesting on this slide is if we would not have had that big boom right there in 2005 to 2007, then that big increase and that big decrease would not have happened. And that was all because of the mortgage crisis. Whereas if we did not have that outside factor, values, occupancy, everything else would have stayed right there. That rent change would have stayed probably on average about 4% over that entire time. So hopefully you can see that. So now we're taking advantage of that dip going below the line and taking advantage of opportunities that present themselves. Go to the next slide. Here is the only known photo of Brian Johnson, top right-hand corner. It's a little bit fuzzy, but you can now see Brian since they have never been on another slide before. So what I'm doing is I'm teaming up with Merrill Calliser. They've got a lot of great marketing and great information, a lot of great contacts. Merrill is definitely a mover and a shaker in the industry. So we're teaming up to create this fund, a $50 million fund to take advantage of distressed assets that will be coming up in the future. Think for a minute back, if you could go back to 2009, 2010, and knowing what was coming, would you have invested then? That's the question I would want to know. 2010, 2011, would you have invested? I think everybody kicks themselves for not investing, or at least not investing more during that time frame. And that's what we want to take advantage of. I got into the business right after the crash in '86 and saw the devastation that had and how to manage through that. Then again in '91, and then again in 2001, then again in 2008. So I've been through all of these dips, and every single time I say, next time there's a dip, I am going to take advantage of it and get everybody involved that I know to be able to make a lot of money during these downtimes. Now, I hope I'm not too early considering, let me phrase, too early I'm mentioning this with everybody being locked in place and jobs and people dying and everything like that. I don't want to be callous to the situation that everybody's happening. But bottom line is there's going to be properties that are going to suffer, and when those suffer, the residents suffer. So I think we're doing good. There's nothing wrong with doing good. How did that saying go? My dad used to tell me this all the time, and so now I'm screwing it up. Is doing well while doing good. There's nothing wrong with that. We'll be doing good and doing well for other people. So we've got Merrill and his team, which is Jeff, Tandy, and Mike, and Robert. And our team, me, Brian Johnson, Julian Alexander, and David Tuttle, who's not on there yet, to focus on this fund. And go to the next slide. And so if you can go to, as long as you're on your computer, go to infocap.fund, INFICAP.fund. And what that is we have not launched yet. We're still about 16 days away from launching this, but I wanted you to know about it so you can register to get more information, because this is going to be a great opportunity to go back to 2010 levels and buy properties on the dip. So that's where we are on that. Go to the next one. So now we go to Q&A. Is there any comments or questions that have popped up, Brian?
There are not. So I guess that means we've covered the information really well. If anybody has a quick question, please feel free to type it in. We've got a couple of minutes left in our scheduled time. And as I said, if we don't get to all of your questions, we'll be glad. I'll personally follow up with you. Okay. While we're waiting while we're waiting to see if there's any questions, just a real brief summary and kind of a recap of what we talked about. And we're really sorry that we're not able to be face to face with you. That's so much more enjoyable. At the same time, we're glad that we're able to be together and share the information that is relevant to you and relevant to us. And as you know, I hope you saw from the performance of the properties, there was some concern moving into April that, we might take a bigger hit due to the coronavirus challenges. But I really want to tout the work of the staff along with the performance of the properties. And it's really put the DGRE portfolio in a good cash position to withstand additional downturn issues in the near future. We feel good about where we are today. And with the expected help in the form of the payroll protection program, in addition to the performance of the properties, we're really in good shape for the near future. And real quickly, I really appreciate your patience as we move quickly through the property updates. And if any of you have any additional questions, please reach out to me, email, phone. I'll be glad to provide any details that you wish. And again, thank you for joining us. Contact us with questions. I'll leave you with this. We put 2 exciting podcasts out on our website. So if you'll go to our website, www.darwingerman.com, and click on the resources tab, then you can go and listen. One of them is talking about what happens when the roofs get torn off your property, and then you'll enjoy the one we just put out there today, which gives you a lot of information about some early experiences in Darwin experiences with growing up in this environment. So again, we'll keep you updated. We look forward to when we're back to meeting in person. Darwin, any closing comments?
No, thank you all for coming online. And I'm sorry it has to be this way. This pandemic is absolutely ridiculous. It's surreal. It's really unbelievable. And so I want everybody to stay safe. Be safe. Know that we're working very, very hard, very diligently, the whole staff, at making sure that your investments are protected. And while there might be a dip in the market, it's not really going to show up anywhere. It's not like looking at the stock market. You could say, oh, I lost all my money, because you still have the equity in the property. You have hard asset right there. And with $4 trillion being pumped into the economy, I am sure that inflation has got to kick in at some point. And being in these hard assets is going to be great for your real estate portfolio. And we'll continue to scour looking for opportunities for you to invest. And we have this InvCap fund, which is going to be for accredited investors. However, if we find another good deal, that this does not limit me from buying other properties as well. And so we will have something for the non-accredited investors as well. And so we're not going to leave you behind. We're thinking about you. I had one call today with one of my good friends and investors, Jeff Young, who's on the line. And he's one of those unaccredited investors, but he's invested with me for over 10 years. And he's wanting to say, hey, wait a minute, where can I do? What can I do? What can I do? And even if it's not accredited, don't worry. For those of you, we will have something for you. Don't be afraid of what's happening in the economy. Just make sure your health is taken care of. We'll take care of the real estate side and keep on doing what we've been doing, which is to make you money and to protect your investment. And again, I thank you so much for your trust. And if you have any questions, feel free to reach out to us. And I think I sent out just so you know, I'm going to go ahead and do this also. You can always send any questions to invest@darwingerman.com, and we will receive those and answer those. And I'm also going to go ahead and give out my personal cell phone. For any of you that are worried, you can call me directly. My cell phone is 214-616-6160. If I can't answer, leave a message and I will call you back at my earliest convenience. And thank you so much again. We appreciate it. Thank you so much.
Darwin, if you don't mind, we've had just a flurry of questions come in here. I want to be sensitive to everybody's time. We'll try to answer these over the next 5 minutes if we can. First question is, do we have any residents with COVID-19? The answer is no, not yet that we know of. We are in touch with our residents, but we have not been notified and are not aware of any. We had a couple of that were scary, but again, what's happening is some residents are getting a cold, and because of what's happening today, they're thinking it is, but all of the tests have come back negative. So no, we do not have any residents with COVID-19. We have a question here. Any update on a potential 1031 buyer for Brookside or Ridgemar? Darwin, I'll let you comment on that.
No, and we have now gone past that window. The possibility of having somebody buy that window is now shut, and the reason for that is that all of the lenders have tightened up. And for example, we even got a quote on our refinance for 1019. They are requiring 1 year's worth of principal payment, interest payment, tax payment, interest payment. That's on, insurance. So they're requiring on the 1019 loan, for example, $1.2 million in reserves to protect themselves as a lender for the next year. They can give a great rate. The rate they quoted right now is 3.45% interest rate with only 1 year of IO, but they can't guarantee that rate until it closes. The next thing is one of the reasons why the 1031 buyer, that window is shut, is A, the loans, and the second part is, if we couldn't get it closed in April and it pushed off till May, then we would have numbers for April. And if those numbers for April were down, then it would mess up somebody else's loan proceeds. So that's the same thing on 1019. While we have great income, we need to have 3 months worth of great income. And so that puts us out of the bounds of getting a loan, just like it would be for anybody that's buying, because of a dip in the income. So short answer, that was a long answer. Short answer is no, we've missed that opportunity. Once everything's back up and running smooth, then we're going to go ahead and do that and look at putting on the market Ridgemar, maybe Brookside if we can get a good price, and the Hawaii properties. But again, we're always looking at the market, what it's doing, and I would guess in the next 6 months, that's not going to be a very realistic deal.
Okay, Darwin, real quickly, several people asking just for a quick update on a 1019 refi, potential for a 1019 refi.
Yeah, I just mentioned that. So we had started the process. We got a great loan quote, but 1019, you have to be over 85% physically occupied, and we are over that, but you need to be it for 3 months. So we would have to wait for 3 months on 1019. So it's not even worth spending the money on an appraisal and environmental, all the expenses we would have, because we don't know where income's going to be in April and May. So we need to have that 3 month history. So that we're looking at September or so for that refinance.
Okay, and a couple of questions here in regard to Valley Center. You said there's 5 spots available. What do you have a minimum?
Well, there's 5 spots. There's $500,000 available. However, it's for accredited investors only, and I think our minimum on that is actually $25,000. And we did that low amount just to let people get their feet wet with us, to show how we perform, how we communicate, and everything that we do. So it's only $25,000, but at that level, we've got room for a lot of spots. But our average investment is $100,000.
Okay, just looking at the last few questions coming in here. We talked about the insurance claim at Villa Creek, so we're good there. Lots of thanks for the property updates. Keep us updated. When will we be having our monthly meetings at Valley Center?
Well, I anticipate that we probably won't be ready for May. However, I'm confident we'll be there in June for sure. And we are also expanding the education, so we'll have something, and not just monthly, we're going to have at least weekly meetings so that we can be more specific on our education. And so there will be a lot of opportunities. Julian is handling that education side, and he is really excited to be able to do that. And that way we can have at least weekly meetings, and even some behind the scenes. Hey, you know what? We're going to analyze properties, at noon on Thursday. If you want to show up, you can. And that way we could be a little more impromptu, have a set schedule, an education schedule planned, months in advance, so that you can also suggest, and right now you can also suggest classes that you would want to have. We're hoping to be able to have CAM-T, CAPS, in there also, as well as other real estate education. We can bring in other people as well. So if you have somebody, or if you're an educator of some type and you want to do a class of some type, then I'm all for that. So we have the room. It doesn't cost us anything to really use it. So if you have any ideas, then we would love to hear them.
Excellent. I'll just close by saying this. We have several questions. People saying this is my first time here and experience with Darwin German Real Estate. Where can I get more information on investments and the structure of the organization to be a potential investor? And I'll be glad to take that. Best way to start is give us a call, reach out to us via email. But if you'll go to Darwin, www.darwingerman.com, there'll be a place there where you can just click and provide us with an email address, and our investor relations team will get back with you, and we'd love to have you as part of our DGRE family. So I'm going to close the webinar. Go ahead.
Thank you again, everybody. Love to hear from you.
Yeah, thank you everybody for joining, taking your time out of the day. Stay safe, stay looking after your family, and we'll talk to you soon. Thank you, everyone.
Bye.